Hey, hello guys. How are you doing? This is Vanati. So let's start our today's video with our motto: Winning is a choice, and we choose to win always. Today's topic is I am going to talk about a strategy for beginners. So first of all, why we need strategy to trade? The reason is every day we are having a gap up or gap down or range bound day, and most of the time it gives unexpected move. When there is unexpected move in the market, if we didn't have any strategy or pre-plan, then it will become very tough for us to handle it. Like we don't won't be sure about whether to buy or sell or hold. So, to avoid such confusion, we need a strategy to trade. Trading without strategy is not advisable. You should trade with a strategy, and you should backtest it for a few months, at least for a few months. Usually, professional traders backtest a strategy for 4 years at least. So without strategy, don't trade. And this strategy which I am going to talk about is very easy, simple, and most known strategy. So I will be explaining it with a few tricks, like how to get maximum trading edge or highest trading edge, so that it will be easy for you to be to take the trade, and also your winning percentage will be high. So this strategy is easy, simple, and most known. So I have taken Reliance chart. So when we are discussing about a strategy, uh, what a strategy will be having, like there will be criteria for why we are choosing the stock, particular stock to trade. And then after uh, mm, that particular stock qualifies for the strategy, then we should know where to enter, exit, and then which time frame to use, and where we have to put the stop loss. So these things we need. First step is like where we should find out the stock which fulfills or which is according moving according to our strategy. That is the first step. Then we have to decide the entry, exit, time frame, and stop. Okay, so the time frame is 15 minutes, and the strategy is like whenever the stock is breaking the previous day's high, the first candle, that is 9:15 to 9:30 candle, should break the previous day's high and close above it. So it is something like the we are choosing the stock which has the most bullish strength. Okay, so that's why we need the first candle to close above the previous day's high. Then our profit target is 1 is to 2, at least 1 is to 2, and after that we will trial it, so that we won't miss the profit, and also we won't lose the profit unless you trial. Sometimes you will be seeing your you will be in profit of 50,000 or 1 lakh, and suddenly the market will turn, and that 50,000 or 1 lakh will turn into 10,000 or 5,000 within few minutes. So in order to avoid such things to happen, we should always trial our profit. And then stop is at the low of the candle. Okay, so the entry is I hope you are very clear about the entry criteria. The first 9:15 to 9:30 candle should close above previous day's high, and then um, we have to use the 15 minutes time frame, and then we are entering above the first candle's high, and keeping the low as our stop loss. And once the target reaches 1 is to 2, we start to trial. So let's see the different type of scenarios. So I have chosen one particular stock only, so that you will understand what type of scenarios will occur. Okay, so here On 18th the price was consolidating, so I have marked the consolidation zone. And if the price opens above the, this is the high, so first candle if it closes above the previous day's high with bullish strength, then I can take entry. So this is our entry, uh, above the first 15 minutes candle high. And then once we, this can see the candle size, it is very small, like the low of the candle is 225.51 and high of the candle is 25.69. So after that it went up and made a high of 26.68, 26.68. So this is a very good movement actually, nearly 100 points move. So this is this type of movement we got because we got a consolidation here. Okay, so whenever there is a consolidation, as we are seeing in the previous videos and all, consolidation always gives implies the market will be trending once the consolidation was taken out by the price. So here also the consolidation was taken out in the first 15 minutes candle itself, and it gave a very good movement. So the first candle's high low difference is small, and the we got a very good move. The next day also the first candle's high was above the previous day's high, but here observe the difference between this candle's formation and this candle's formation. This candle's formation is very small, but like it is 20 rupees, 20 points difference only. But see the this candle's size, like the low is 26.49 and high is 27.10, like 60 points difference. So the previous day already we had a 100 points move. So the next day, mm, just the first candle itself has a movement of 60 points. So the most of the movement has happened in the first candle itself. So in this type of cases, your profit target will be small, like that most of the time if the first candle is very big, then the movement won't be continuous after that. That's what has happened here. After that the but as per our strategy we can take the trade, and it did not give much profit or much loss. More or less above the high of the first candle only the price closed. And then the next day see the first candle, the price, this candle size is small, but the same thing has happened, like no profit or no loss type of scenario has happened here. So what you how you have to um, improve your understanding about the market is, like after consolidation we had a very big breakout, and then the next day the first candle is very big, but after that the buyers are not showing their strength, and the price is moving in the sideways only. So the next that implies the buyers are not willing to buy the stock at this level. So once the buyers are losing their strength means the price won't move up. That's what has happened here. The next day the price, even though it opened above the previous day's high and closed above it, since the previous day itself the buyers are not showing interest, next day also it continued, and it moved in a sideways range. So if you note it carefully, it has formed a consolidation zone, and once if it is broken we can expect a downside move. So that's what has happened in the price fall down. uh, the next is like um, here this candle, see this candle is uh, has closed above the previous day's high. Okay, and it is more bullish, and after that there was no follow up, like if we take the trade, the price uh, mm, um, went in range, and then closed in the range itself. Why it is happening is, see this range, 2802. The 2800 was not sustaining in the previous few days back itself. So here also the 2800, the price was unable to sustain it, and that's why it is not showing um, bullish strength. So these things you have to always keep in your mind, the previous days, the previous support resistance. Here it is, so it is a resistance and the price fall down nicely. So once the price reaches here, when it is not showing bullish strength, the price is somewhat like trying to fall down, like that only. Here also, see, here the this is the support zone, and the price was unable to move upside it, and we had a fall from here to here. So whenever you are trading, you should always remember that, un, the support and resistance are the most important thing, next to candlestick pattern. Price action and candlestick pattern always implies what is happening in the market, and it shows us clearly whether the buyers are gaining strength or sellers are gaining strength. Okay, so next to candle pattern, the support resistance is the most important thing, as market always try to test the support and resistance before taking decision about the trend direction. So whatever strategy you are using, you should always keep these things in your mind: support, resistance, and then consolidation, because after a consolidation we can expect a big breakout. So if for swing trade, if you are taking this uh, high, let's say you have taken this stock, when it above the 15 minutes high, let's say around 2570, you have bought it. Then if you are keeping it for 2 3 days, here and here, once you are seeing the buyers are not gaining strength, let's say you book profit around here, that means 2780. So from 2570 to 2780, that is a very good move, like a short term swing trade. So that also you can take. This strategy is applicable for intraday and also for short term trading. I won't suggest you can keep it for more days if it is not showing any bullish strength. See here, the price, for these 2 days the price were showing buyers reducing the strength, and the sellers are trying to come in. So in such cases, it's better to close your trade and take profit. So that's all for today. um, this is Vanati signing off. Always remember, you can trade better than you think.